one of the biggest fund managers globally, ARK Invest, led by Cathie, has just dumped a load of Coinbase shares. She's also been dumping the GBTC investment as well. What does this mean? Is she losing bullishness here on the crypto markets, or is this just her trimming some profits? Is there something we could learn from the head of this investment fund? Remember, she's managing $6.7 billion US dollars worth. And the latest news we're seeing here is that she decided to offload some Coinbase shares. Yes, if you take a look at her record here, yesterday, which was November 27th, she decided to sell 43,000 shares of Coinbase. This is the highest price it's been for her since last year, back in 2022. She decided instead to start topping up on Robinhood, which is very, very interesting. Also, tie that in with the fact that she's been offloading her GBTC shares as well. And this gets us thinking, is she starting to divest away from crypto? Is she thinking that this is a flash in the pan and that we're getting a bigger pullback later, so maybe she's trying to trim some profits? Well, we've got to take a look into this. First and foremost, let's try to understand what is the real size of this, right? If you take a look, 43,000 Coinbase shares sounds like a lot, but really it's about $5.3 million. Not a crazy amount, and it does make a lot of sense here for Cathie Wood. You need to understand that historically, Cathie Wood sold a bunch of Coinbase shares at a really low price. So for her to take advantage of this opportunity when Coinbase is trading at one of its strongest price since, you can see here, since April 2022, it makes sense for her to kind of divest that a little bit. You got to remember, she's running an ETF. She's got to keep it within sensible parameters. She will have certain percentages which she cannot let it go beyond that percentage, and she's going to want to trim that. So we can see here she's gone ahead and done that. Now, it's interesting to see her topping up some Robinhood, but again, it makes a lot of sense. Remember what we say here on this channel. You want to buy when others are fearful, and when others are greedy, that's when you want to sell. Now, what do we see? There was a lot of FUD around Coinbase during the SEC allegations, right? A lot of people scared, a lot going on. Nobody wanted to touch it. So in those moments, that's when you would have, from a hindsight point of view, wanted to buy. Now that CZ's been fined, he stepped down from Binance, Coinbase looks like far more of appealing buy now, right? A regulated, well, not regulated fully, they're still getting sued by the SEC, but NASDAQ listed, IPO'd, publicly traded, audited company that is Coinbase, suddenly seems like a better option, right? And since they're the second biggest exchange after Binance, it makes sense that people want to be driving this price upwards. And that's why we're seeing a climb in the Coinbase price, which, full disclosure, I hold some shares of Coinbase as well, but you can see why she's looking to trim. I'm not personally trimming, but it's interesting to see her trimming when many people are calling for a bull market. Why would you start to trim some of your profits? Incidentally, you can see how she's topping up, right? On November the 8th, she bought some Robinhood, and she bought some more Robinhood now. Again, she understands that when people aren't interested in stuff, that's where she wants to be topping up, and nobody's talking about Robinhood right now. But come the next bull market, not just in crypto, but traditional finance, guess what? Retail traders are going to be trading on Robinhood again. There'll be the AMC, GameStop stuff going on again. There'll be other exciting stocks which people want to buy, and Robinhood are always good at listing things like Dogecoin and Shiba as well. So naturally, Robinhood tends to do well when that retail euphoria starts to come back into the market. So it makes a lot of sense why she's kind of adding some more weight here to Robinhood and trimming some Coinbase. But is this something for us to be worried about? No. Are you tired of worrying about the security of your cryptocurrency transactions? In this crazy world that is crypto, protecting and preserving our digital assets is everything. And for that reason, I partner with NordVPN, the best VPN service for crypto traders. With NordVPN, you can be sure that your online transactions are completely secure and your identity is hidden from prying eyes. Their military-grade encryption technology makes sure that no one can access your data, even on public Wi-Fi networks, so you can trade with complete peace of mind anywhere, anytime. Guys, seriously, don't risk your hard-earned crypto and NFTs for the price of a coffee each month. They've also offered a free month and up to 60% off their plans. Oh, and they've got a 30-day money-back guarantee. Guys, seriously, it's a small price to play for a rapid, safe VPN. Definitely check it out. Link is in the description. Ijaz.uk/NordVPN. And let's get back into this video. Not particularly not particularly worried here on what's going on with ARK Investment and their selling of their Coinbase shares. Remember, they've got to balance their ETF. They've got a very different kind of investment approach to maybe you and I would have here in terms of our long-term portfolios. Now, if we jump on over to the charts here, you can see the Bitcoin price moving up a little bit here today, sitting at just shy of 37.5. But more importantly, which I'm showing you here, is that the dollar index is dumping. Look at that 4-hourly candle here on the dollar index, sending it here to the downside. This is good. This is exactly what we want, guys. We need to push this dollar index down to the downside. If you look at here on the daily chart, the dollar index is very extended away from its EMA ribbon. The EMA ribbon is flipping as well, and it's going to set us up for a big move to the downside. Remember, on the weekly chart, we want to see that. We want to see this stay below its EMA ribbon for a long period of time, not just like how we had here and then lost it again, right? We want to stay beneath it for a long period of time. We want to see the EMA ribbon on the weekly chart flip as well and start to move to the downside. Every time the dollar index moves to the downside, that is when risk on assets do well. You've seen here, this was a bull market, this was a bull market. That's when crypto and risk on assets do well, is when this can go in this direction. That's exactly what we want here on the dollar index. Now, incidentally, on Bitcoin, you guys can see what's going on Bitcoin. We're starting to see a little bit of a green day here today, which is good. We're riding off of the EMA ribbon here on the daily chart, okay? So you guys know we're in this kind of big pattern here, which I've been monitoring. But then the other pattern I want to share with you guys is this, right? You've seen over the last couple of days that I've been monitoring this ascending triangle. And on this ascending triangle, we had 3 attempts already. 1 attempt here rejected. 2 attempts here rejected. 3 attempts was actually a fake out thrown back into the pattern. But we're starting to bounce it. If I bring out the EMA ribbon, you can see it acted as a little bit of we lost it for a bit and then we've regained it now on this 4-hourly candle we're trading on right now. So we're closed below this above this EMA ribbon is a good sign, but the question is going to be, do we have enough strength from rotating here to just go and mount an attack? I wouldn't have minded if we came further down and then built some strength, maybe did something like this and then worked our way up. But the fact that it's bounced quite quickly, we want to see, are we able to maybe hold the EMA ribbon something like this and then mount a proper attack here at the 38,000 neckline and then eventually work our way to the upside. Remember, the price target from this type of a pattern, if I show you how to do the measured move, and again, if you're not familiar with how to do all this sort of stuff, Ijaz.uk/TA is where you're going to learn all this. I've put this all in a structured curriculum for you guys. So if you apply this to the point of breakout, you can see that the price target from this type of move brings you up into that 40,000 territory. And really, your next major resistance is at 45. So breakout of 38 not only gets you on your way towards 40, but really the question is, will this be the start of the move that eventually takes us up towards 45? And that's something I want to be in the market for. I wouldn't want to be sitting out of the market if Bitcoin's going to run up to 45. Absolutely no way. Just like how people were wasting their time and Bitcoin moved quickly from 20,000 up here towards 35 and 37, it'll move quickly up towards 40 and then 45. And you're sitting there waiting for the perfect time to buy your Bitcoin. You're not going to be in the market. You're not going to be in the market because you're like, oh, I thought it was going to go down to 33 and 34. And then it's going to be at 45 and then 50 and then 60. And you're constantly going to be chasing it and never quite getting the position you're looking for. That is why I'm in the market. If we do get pullbacks, which again, you've always got to be prepared for, right? If it does want to fall down here into 34.5, into 33 even, I'm starting to lose kind of confidence that it's going to come down too far. I mean, you can see here, the bottom of the EMA ribbon is now 34. So chances of seeing it at 33, 33.5 start to fall quite dramatically because again, a pullback into the daily EMA ribbon, even a breakdown from this triangle here, and the EMA ribbon acts as support all the way down to 34,000. So a lot of support here from the bulls here from the EMA ribbon. So that's one thing I wanted to share with you guys. We've got to watch for this pattern. But you've got to also tie in what's going on from an economic point of view, right? Because this is a very important week. Today, we've got a bunch of important Fed officials speaking, right? You've got Fed Walla, you've got Fed Bowman, you've also got ECB President Lagarde speaking as well, and Fed Barr speaking later today. So it's going to be a lot about the Fed officials today, which is a little bit why the market's kind of muted. Hopefully, they don't rogue pull us. Hopefully, they don't say anything negative. Remember, the market's pretty much kind of certain here that we're not going to get a rate hike on December the 13th. Having said that, I've seen a little bit of a trend here. Seen just 5% of the market just starting to hedge their bets a little bit, right? Just starting to say, oh, what if we do get a surprise rate cut as a Christmas present? So they're starting to price that in here, but still, overwhelming majority of the market is expecting pause again no further rate hike, and then we'll reevaluate in the start of the new year. So coming back into our calendar, we know tomorrow we get important data kicking off within the US with the GDP figure. This is going to be a preliminary reading for GDP in the States, Q3 reading, and that's going to be an important thing which moves the market. And then in my mind, more importantly really, is the Thursday where we get our core PCE inflation. Remember, PCE inflation is what the Fed used to make their decisions about whether to pause or rate hike. So that's what I'm going to be looking for on Thursday. Remember, if that comes in line, showing the same trend that CPI was showing, that inflation is coming down, showing the same trend that PPI was showing, that the trend is coming down, there's very little chance then, if that's coming down as well, the PCE inflation, that the Fed decide to do a surprise rate hike. That's going to become less and less likely if that number comes in our favor on Thursday. There's one also very important kind of chart I wanted to share with you guys, is this. So this is from Coinmetrics, and it's very interesting because almost what it's saying is, are we getting diminishing bull markets, right? Are the levels of the bull markets getting smaller and smaller with each cycle? And it makes a lot of sense. If the crypto market cap is growing, if we're getting closer and closer to mainstream adoption, the kind of percentage returns you expect to see in a bull cycle will start to diminish, right? Eventually. That makes a lot more sense, right? Because you've got less and less kind of adoption to have. And so the analysis they've done is shown this. They've shown this center line. Look at this blue line. That's the average price trajectory of all the previous cycles, right? So if this was the starting point here at the axes, that's the average return you would see. And then what they've done is, this is the range. So the light blue here shows you the range, okay? So the lowest and the highest price trajectory you've seen in previous cycles. Again, this being the starting point. If you look at the orange line here, this is the current cycle's actual price trajectory. So there's two ways to look at this. Are we now currently in a bull market, and this bull market is miles off the trajectory of previous cycles? That's one way to look at it. Or are we yet to have the bull market? Is the bull market about to come and this is going to skyrocket up and go back into these kind of trajectory levels, coming back to these kind of levels of 300,000 here, where this blue line is? And the analysis they said is the following. They think that while it's unlikely we ever get close to the top of the range, the bottom of the range is still realistic. Okay, so again, they're saying you could be kind of coming up here into the bottom of the range, which is still going from $10,000 up towards 100,000, which is still a 10x to move here to the bottom of the range. So very, very interesting analysis here by Coinmetrics. Now, I personally agree with the diminishing returns model. I think that makes a lot of sense, right? If you look at any other asset class, whether it's something like a Tesla or gold or silver, once you have your early cycles where the early adopters get in, you see crazy volatile bull markets, and then it kind of flattens down, right? I think you'd be kind of, immature to think that Bitcoin forever is going to have these crazy bull markets. No, the crazy bull markets will start to dampen over time as we get more and more adoption, and as the genie comes out of the lantern, right? Once it's out of the bag, it's out of the bag. Everybody knows about Bitcoin, so we expect that to kind of start to calm down over time. But I still think we're in for a powerful bull market this year, and I think that's going to culminate in the ETF. It's going to culminate in more US regulation, more European and UK regulation, and more serious money coming in. I think it's going to be the flow of real institutional money coming in which really drives the narrative in this cycle, less so than the retail traders as we've seen in previous cycles. So there you have it, guys. There is my update on Bitcoin. Cathie Wood selling a bunch of Coinbase shares, but nothing I'm too worried about. We're looking strong here in the Bitcoin price, looking to break that $38,000 mark, and we are actively trading. So if you want to see what kind of trades the community are taking, make sure you head into our free Telegram group, ijaz.uk/TG. Link is in the description. Hope to see you guys in there. Thanks for watching, and I'll see you in the next one.